And welcome to another Monday Mortgage Moment. My name is Brenda Sainamont, and I am a licensed mortgage agent with Mortgage Sense here in Barrie, Ontario. My passion is taking the confusion, frustration, and judgment out of your home financing experience and helping you reach your goals of home ownership, comfortable debt management, and wealth building. Today, I want to try and clear up some misunderstandings surrounding interest rates. So as we've heard in the news, the Bank of Canada has lowered its overnight lending rate several times over the past few weeks in an effort to maintain and manage the economic impact of the coronavirus and the widespread shutdowns that we've seen happening in local businesses. Some of these rate reductions have been passed on to you and me as the people who borrow money from financial institutions, but not all, and not necessarily at the same time. So I want to try and explain how and why that happens. So I guess just an explanation. So the Bank of Canada's overnight lending rate, it's actually the rate at which financial institutions use to lend and borrow money amongst themselves. So it's not actually an end user rate. So then each individual financial institution has their own sets of rates that they use when lending to the public. So they have their prime rate, which is typically used for variable borrowings on funds that tend to go up and down like lines of credit. And then they also have a set of fixed rates, which depend on the term or length of the loan or the mortgage. So the factors that influence how these rates are set are based on a number of factors, including the Bank of Canada's overnight lending rate, economic stability, and bond rates. So shorter term loans and borrowings are more impacted by the Bank of Canada overnight lending rate, and therefore the bank's prime rate. Whereas when you're looking at longer term mortgages and loans, they tend to follow more the bond market. And the reason for that is, you may not be aware, but most of the time financial institutions, once they've loaned money out to clients in the form of mortgages, they turn around and they actually sell those mortgages off to other investors. So when they do that, when they're selling off their loan portfolios, the bond market is actually one of their main competitors. So they watch the bond market very closely and price accordingly so that their product stays competitive. So the way the bond market works, so bond prices tend to go up, it's supply and demand, right? So the more people that are buying bonds, the prices tend to go up. And that tends to happen especially in times like these where we've got some economic instability and people are really leery and afraid of the stock market. So they tend to move their funds into something more safe and more stable, such as the bond market. So when the prices of bonds are increasing, the yield on those bonds are actually going down. That's an entirely different conversation. Happy to have it with you offline, but not something I'm going to get into here. So mortgage rates tend to follow bond yields, right? So when you've got current situations where bond yields are decreasing, that's when we see mortgage rates decreasing as well. So what we've seen over the past several weeks is that while the Bank of Canada introduced 3 separate reductions in the overnight lending rate, the financial institutions didn't necessarily pass on these reductions immediately or entirely. So in some cases, we actually saw a short period of time where even though the Bank of Canada rates were going down, mortgage rates went up for a few weeks. The main reason for that was the bank obviously had some legitimate concerns about liquidity, the number of people that were taking advantage of the mortgage payment deferral options, and just the general concerns about people's financial stability given the amount of job loss and layoffs that we've been seeing. What's been happening though, and we're now seeing mortgage rates start to go back down, and one of the main reasons for that is that the government has stepped in and they've put a lot of processes more in the background, not necessarily something that you as the general public would see, but they've put programs and processes in place to help make sure that our financial institutions have the liquidity and the borrowing strength that they need so that they can continue to support the economy by lending and supporting their clients. So I hope this helped. It's a really high overview of how interest rates work, but I wanted to clear up some misconceptions about, a lot of people were asking, well, the Bank of Canada reduced their rates, why did my mortgage rate go up? While banks are influenced by the Bank of Canada overnight lending rate, they're not directly tied. And the banks at the end of the day can set their rates differently depending on a number of factors. So my name is Brenda Steenemont. This has been your Monday Mortgage Moment. I help my clients to build better financial foundations for their lives. I hope you are having a prosperous and fantastic day, keeping safe, keeping sane. Any questions or concerns, I'm always available to chat. Thank you for tuning in and enjoy the rest of your day.